Welcome back to the discussion Smart Auto Shopping and Financing, sponsored by PenFed Credit Union on Federal News Network. My guests today are Jay Fee, the Vice President of Consumer Banking at PenFed Credit Union, Chris Klaczynski, the Director of Direct Auto Lending at PenFed Credit Union, and Sean Worthy, the Assistant Vice President for Corporate and Business Development at PenFed Credit Union. I'm your moderator, Scott Maucione. So now we're just going to talk about financing in general, because, there's lots of different ways that you can finance. You can finance it for a new car, a used car, and, refinancing in general, which we've been talking about. So when you are looking into financing, what are the best ways to do some homework, and how can you do your research to make sure you're getting a good deal?
Yeah, I think the most important thing to consider here is there's a lot of studies that we get from some of our business partners that we work with on research around how much time do consumers spend researching a vehicle, finding the right vehicle. And some very interesting stats. And it's actually, it's funny, as I was kind of considering when you're talking about financing, how to answer this question, it's going to be really interesting to see how some of these statistics change due to the whole pandemic, due to COVID. So in general, kind of what we understand is consumers are spending about 90 days. Once they determine, hey, I'm in the market for a car, they're spending on average about 90 days to research what the right vehicle is. They're going to kind of drill down to classification, right? Do I want a minivan? Do I want an SUV? Is it a sedan? Do I want a sports car? Right? Whatever it may be. So they're taking about 90 days to kind of whittle it down to that exact make and model color. Over that 90 days, consumers are spending anywhere from 15 to 20 hours. And again, a lot of these studies I'm referencing are kind of pre-COVID, so it'll be very interesting to see how this changes over time. But all of the metrics and the time spent I'm referencing is solely around finding the right vehicle. Consumers typically omit the need to research how they're going to finance the car, pay for the car, whatever their lease the car, right? Whatever that determination is. And that's kind of the number one point I want to drive home here. You've got to spend time researching financing. And a lot of that's going to depend on things like, are you buying a new car? Are you buying a used car? Are you going to lease? And each to their own has pros and cons, right? There's benefits to leasing, there's benefits to buying new, and there's certainly benefits to buying a quality pre-owned. But that's kind of my best advice to friends and family, right? When you determine, hey, I'm in the market for a car, sure, you want to make sure you get the right car that fits the needs of yourself or your family. But you definitely want to invest time in researching how you're going to pay for that vehicle. There's a lot of great tools. There's a lot of great outlets online, right? There's a lot of podcasts that you can listen to and subscribe to. Certainly PenFed, right? I always plug PenFed. We're a great resource. We have a lot of great shopping articles on our website. We've got a lot of great content to help kind of understand what the options are when it comes to financing. But that's kind of the number one point I would want to drive home is do your research. When you're ready to buy a car, make sure you spend at least a couple hours to determine what's the best situation for myself to be able to purchase this vehicle.
So, let's say you are doing the research. What sort of things should you keep in mind? I mean, there's a lot of different mixes that you can do. You can put a big down payment and a smaller finance, a bigger finance and a lower down payment. What are some of the options that you have for that?
Yeah, I would say, it's going to depend on the consumer, right? Every situation is kind of unique. But you need to, one way I would look at it is once you do sort of select the car that you think fits your needs, there's a very powerful tool out there, TrueCar, right? We partner with TrueCar through our car buying service. And you could kind of get a sense for, through their tool, what should I be paying for this car? So kind of once you lock down that number, right? Let's say you land on a vehicle and you determine, okay, on average for this exact vehicle, consumers are paying about $20,000, right? What I would say is consider what your tolerance is for that monthly payment. A good rule of thumb in the industry is 10% of your net income per month. So if you make $4,000 a month in net income, then you should be looking at a payment around $300 to $400. That 10% rule is really an all-in factor. So your car payment, your insurance, maybe some gas costs, and a little bit set aside for maintenance. But that's one thing certainly to consider is like how much you can afford. There's a lot of really great affordability calculators out there based on the purchase price of that vehicle and how much money you make. It's a really good kind of rule, right, to follow when it comes to considering, how much you can afford.
There's a lot of great resources out there to, as Sean was saying, to actually go out and factor in what are you actually paying for the vehicle. Sean mentioned TrueCar. Probably the first thing, the biggest mistake that people do when they're going out and looking at buying a car is they don't really understand kind of what the total amount is that they're going to finance. And so fundamentally, you hear MSRP and everybody's like, well, I'm not paying MSRP. Nobody pays MSRP. So there's tools out there like TrueCar where you can actually go out and see what the total actual average amount is for the kind of car that you're buying. But you also need to factor in some of the other things, title, taxes, tags, delivery fees. Generally, they can run anywhere from, depending on the amount of the vehicle, they can run as little as $1,000 if you're buying a used vehicle under under 10,000, but they can run several $1,000s if you're buying say a luxury SUV, kind of over 40,000. So factor in, if for an average purchase there of $25,000, that you're going to actually pay probably close to $2,000 in taxes, titles, fees, etc. Once you have all that, you're kind of sitting there going, okay, well, what can I afford? Sean's already covered a lot of the things in terms of, what banks and auto finance companies and credit unions look at when you're looking at, okay, how are we going to evaluate what extension of credit and what actual rate to assign? And when you're looking at that, there's things called debt to income, which is your total debts to your income, which generally you don't want to exceed over 45% if you're looking for like what's called a prime or super prime rate, which is generally the rate that most people want, and they're the lowest rates. And then there's also things like the payment to income, and as Sean alluded there, it's generally you want that to be about 10% of your monthly amount there. So when you're looking after you've decided what you can actually afford and what the actual amount's going to be, obviously then it gets to the point of trying to then select an auto financing source. And so there's lots of great places to go out there and look to see what rates different people are offering. There's marketplaces out there that you can go out to, and you can just kind of you throw your name out there, and then unfortunately you get bombarded with offers. There's also other places you can go, and you can see there's a lot of people that advertise their rates in a marketplace. Have to be a little careful when you're starting to look at those types of places like Credit Karma, because they can be great resources, but there's also sometimes there's reasons why those folks are being sponsored and promoted out there, and it's not necessarily because they're the best rate; it's because they've paid for placement out there. So I would encourage everyone who's going out there and looking to look at your local bank, but also look at a credit union. Most people don't know that you can actually, and there's a lot of credit unions that you can actually join, and credit unions generally have better rates than most banks. And so they operate at lower costs. They don't make as much money. They don't, they're not bound to shareholder wealth the same way that banks are. So therefore, that's the reason why they're so good at auto loans, and that's why they offer the best rates. So I would encourage you to go out to your local credit union site or PenFed and look to see what the offering is there. Bankrate.com can give you kind of an overall idea of what kind of what a good rate is if you're looking for just kind of a balance out there. So those would be some of the resources that I would highlight.
Is there anything that consumers could be or should be wary of? We all want a Bentley, but sometimes a company will try and convince you that you can buy a Bentley when really you should be buying a Honda Civic. What should you be careful of? What should you keep in mind when you're doing this research, and take with a grain of salt, or maybe not take with a grain of salt?
One of the keys really to that is it's what's called total cost of ownership. And so it's the mistake that people do with cars and homes. A lot of times they look at, wow, I can afford that several $100,000 home, and then they realize, they can afford the payments on the house, but There's also an electricity bill and a lawn bill, and a ton of other things that go in there with total cost of ownership. Same thing applies to a vehicle, of course. Most people figure that out with their first car, that it's not just the car payment, it's also, as Sean talked about, you've got insurance, you got gas, you got a ton of other things that go into it. And generally, when you're looking at those types of things, you have to have what you would consider kind of a monthly budget on top of actual your car payment. And you should look into making sure that you can afford that, so you're not house poor or car poor.
Great. When it comes to actually financing one of these cars, who should you look into? Should you work through the manufacturer? Should you work through the dealership? There's so many options with this. What are some of the best ways to do that? And is it better to work through the manufacturer?
I think it really comes down to a couple things. One, you have to consider, are you looking for a new car or used car? So for instance, take new car, for example. When you're shopping a new car, you're probably going to see on a manufacturer website or other sites, you're going to see a couple options. They'll probably promote a low interest rate, maybe a 0% rate, but they'll usually offer alternatives, and those alternatives are some form of rebate. And a lot of times what you find is that it's kind of an either or. You can either have the cash, the rebate to lower the price of the vehicle, or you could have this very attractive rate in financing. Typically from a manufacturer side, there's trade-offs between those. And so what you can find is actually if there are rebates on a vehicle, it's probably better not to actually finance with the manufacturer, because you can probably combine that rebate with another lender and get a low rate and get those rebates on top of it. And additionally, what you got to consider too is a lot of the times manufacturers may not offer extended term financing. So 84 months, there's some lenders out there that support 96 months. I personally wouldn't recommend financing a car that long. But manufacturers usually don't go that high on terms, which again can come down to affordability. So maybe you really want to take that extra step. You're looking kind of at the mid-grade car, but to jump to that upper grade car, you may need to get a longer term. Manufacturers may not be able to provide that option. And then used cars, typically, manufacturers, unless it's a certified pre-owned vehicle, which manufacturers support, typically it's kind of left up to the dealer. So you usually don't find a lot of super attractive low rate offers on used vehicles. And then that's where, again, probably if you're shopping a used car, you're going to be checking out available rates through a credit union, or the dealer can help place you somewhere. And again, with used cars, there's typically not any rebates to offset, so you're really just trying to get the best rate possible at that point.
Scott, if I could jump in, I've got a kind of a specific use case, right, where I was able to take advantage of an OEM offer. So I bought a Chevrolet, right? It was actually a Suburban a little over a year ago. And it was like a $4,000 or $5,000 cash rebate, but you had to finance with the manufacturer. You had to have finance with GM Financial. But the rate, and it was the market rate, so like the tier A, the leading rate was 5%. So to finance the vehicle and get the cash rebate, I had to finance with GM. So I decided to because of that cash rebate. But I had a 5% interest rate, and literally within 3 months, I had actually refinanced the loan to PenFed. So there's, like Chris said, right, it kind of depends on what that OEM offer is. In some examples, you may get 0% is very common amongst OEMs, manufacturers. So there will be like a $3,000 cash rebate or 0% financing. So if you arrange your own financing, you can get the $3,000 cash rebate. Sometimes they come together, kind of like in my scenario. So kind of doing your research, there's a lot of tools out there where you can do the calculations to determine, hey, is it better to take the cash rebate, take 0%? If you take the cash rebate, obviously I would recommend arranging your own financing, and you kind of got to do the calculations to say, hey, which one is going to be better for me? In my scenario, I determined, hey, I'll take the cash rebate, finance with GM Financial. And I know, obviously I'm an employee of credit union, or I'm an employee of PenFed. So it was a no-brainer for me to flip that loan over to PenFed. But at the end of the day, I put myself in a much better financial position when, I did all the math and determined like, okay, this is obviously what's going to be best for me personally.
Right. Quick question before we go to break. When you go in to finance something, what should you know about yourself?
I'll start that one. I think, obviously understanding your credit, right? Understanding what your FICO is. Do you pay your bills on time? Those are certainly going to be factors in the rate that you will qualify for. I would say always consider getting pre-approved. If you get pre-approved, so basically you could go to a credit union or a bank and say, I want to apply for a loan. I haven't picked out a vehicle yet. That financial institution in most cases is going to tell you, here's the dollar amount that we will qualify you for. So you apply for the loan and they say, hey, okay, we think you're worthy of up to $30,000. Now, you can shop essentially like a cash buyer, right? You got a check in your pocket with PenFed up to $30,000. You can go into that dealership or browse online knowing, okay, I can purchase a vehicle up to $30,000. That will allow you to negotiate with the dealership or the seller like you're a cash buyer. You don't have to worry about financing. You're already pre-approved. I mean, it really, gives you the ammunition to negotiate the price of the vehicle and not have to worry about like monthly payment. How am I going to finance this vehicle? So that's kind of a good rule of thumb I give to friends and family is get pre-approved, shop like a cash buyer, worry about the purchase price, and then you don't have to really consider the financing.
To tag on to that, I'd also say understand what you want to walk out of there with. If you're going to be going to go to a dealer and you're purchasing the vehicle, understand are you looking to get a vehicle with an extended warranty? Because a lot of people get to the point in the purchase process at a dealership and they have a monthly payment in mind and they've established the purchase price, but they haven't considered, do they want certain other options on the vehicle? They haven't considered whether they actually want to get an extended warranty or gap insurance or some of these other products that are going to be sold after they've actually determined what the purchase price of the vehicle is. So having an understanding of that will really make the purchase process a much more pleasant experience than kind of feeling surprised or oh, wow, yeah, I wanted to have this monthly payment, and then I went, and then by the time it was all over, I was paying $100 more a month.
Yeah, maybe I'll tack on there too, right? It kind of summarize and also elaborate more. Know as much as you can. Be comfortable with what you want to you're shopping for. Be comfortable with what you're intending for, but also at the same time, don't be afraid to if walk away. Right? You can always come back in. You can always shop. There's plenty of cars out there. If you start going to the dealership or you go to a lot, and you're looking at a used car or new car, and maybe you find something new. Take some time. Take a step back and make sure it's the right decision. In the end, you want to be happy with your purchase, right? Kind of some of the, buying a vehicle, buying a home is kind of some of the most expensive purchases, we'll go through in our lives outside of probably college or marriage these days, right? But you want to make sure you're making the right decision and you don't regret it in the end. So be confident, be comfortable, and don't be afraid. If you need to take a time out, take a time out.
Good to know. We'll take one more break. I'm your moderator, Scott Maucione, on the discussion Smart Auto Shopping and Financing, sponsored by PenFed Credit Union on Federal News Network.